think my team changed the slide last minute. Well, I'm the founder of Piranha. Nice to meet you all. I really believe in the power of stablecoins, and my goal is to convince everybody and give them a good enough reason to move their money to stablecoins. So that's us. We crossed 30 million in TVL recently by working with various partners, including our amazing partner, Meteora, and we helped them put on the show at Dhabi. All the designs you see out there and the merch that you got, including this one, were made by us. So I hope you like it. Let's see. Oh, yeah. Intern made this joke, truth or false. I was actually bald at some point in my life, not right now. OK, so this is what I want to talk to you guys about, a serious topic. When alternatives go mainstream. We are considered a stablecoin company, but we're not building in payments. So a lot of people ask me, like, what are you doing? What do you mean by a stablecoin company? I see immense potential in creating quality, productive assets and packaging them in a way that's accessible to retail and a global audience. Basically, anyone, anywhere, including in the future AI agents, can access them. That is completely not possible in using traditional Rails. So this is why I think Solana's next breakthrough, and many blockchains' next breakthrough, will come from asset management, and specifically will come from alternatives. And feel free to debate with me afterwards whether you think you agree with this or you disagree with this, because alternatives is a 20 trillion catch-all term for asset classes that didn't quite fit into traditional asset classes, which are real estate, bonds, equity, or debt, or equity. And alternatives are including crypto, quant strategies, LPing and Meteora, that would be considered kind of an alternative asset, and also traditional assets like a debt, a bond, packaged in novel ways. So really anything we're seeing right now in this room will be considered alternatives. Two of the fastest growing alternatives, one of them is blockchain crypto assets. The other one, I believe, can use blockchain to open access and become an even faster growing asset. So for those of you who are from the West who have access to like mutual funds, ETFs, and maybe you have some access to like tokenized CTA, or not tokenized, CTA ETFs, you'll see the change in the last couple decades where in the past, maybe your parents' generation, people only bought mutual funds, and then ETFs came along. So mutual funds are daily NAV, net asset value. So daily asset value update, you can only trade once a day. And ETFs, or exchange-traded funds, now you can trade anytime during market opening hours. And I think this is the ETF moment for finance, really, is to go tokenization, because traditional Rails are so rigid and they have not been able to adapt to this new change of assets that people want. How does a traditional fund onboarding work? Let's say a lot of you guys might have heard of, y'all know JLP. JLP would have been considered a fund, and that would have taken 18 months, 12 to 18 months of due diligence, onboarding, going to a fund manager, and it would be a quarterly redemption product, which means you can buy into JLP, but you will not be able to redeem 90 days from now. And there would be no access to retail. So this is why tokenization or bringing these assets on-chain is pretty important. Previously, only institutionally accessible. With on-chain finance, things become uniquely modular, composable, which I'll talk about in a little bit. And streaming, for example, streaming yield in real time, previously not possible. Looping, you would pay at least $1 million in legal and banker fees to get there. My mental model for how we can grow together as an ecosystem is we have to increase our GDP as an economy, or as like our little financial system, which is still tiny, tiny compared to traditional financial world. So there are two ways. One is to increase capital velocity, which you all are doing, being the LP army, facilitating liquidity and letting people move their assets faster. The other way is to import yield. we import yield, as the previous panel said, oftentimes through RWA, but we can also import yield through really other chains, anywhere you can get productive assets, because higher yields translates to stickier capital, translates to more capital on chain, which translates to higher capital velocity. And we have seen this year that infinite capital velocity is not, extremely high capital velocity is not sustainable without more access to good assets. So if you want to trade meme coins like 100,000 times a day or a couple $1 billion of volume, it's not going to miraculously go to a couple trillion because there's just not enough demand for people to do that. LPing on Meteora looks like this. Y'all are familiar. It can be very rewarding, sometimes a bit cumbersome, but I know Meteora's team's working on this. As you guys know very well, good LPs boost capital velocity, but also helps you guys profit. So why do we need asset management, and why am I looking at asset managers? You are kind of like your own asset manager right now, each one of you, part of the LP army. But what if you could access top 1% of the LP armies, trading across different DEXs, different sexes, even assets beyond crypto? That's kind of what quant funds do, and that's the fastest growing type of fund in the last 20-ish years. Similar to LPing in Meteora, you can LP into Perenna USD Star, which is what we're building. We use a combination of on-chain money markets or lending protocols and sophisticated LP strategies to generate consistent returns. It's like packaging an elite LP army into a single token. So one day, I wish to see Meteora here soon. If someone's working on making Meteora LPing packaged more diversified, more sustainable, please come talk to me after this. So far, we import yield from Binance, Lighter, Hyperliquid, and I'm looking to add more centralized exchanges and hopefully go into beyond crypto exchanges soon. Now that blockchains gave us the freedom to imagine, I think there will be a ton more tokens similar to USD Star getting created, and we're just seeing the first, let's say, 20 to 50 in the last year. So my latest mental model is we need to import yield. Some people export yield. Meteora would be considered like a yield manufacturer because you take assets in and you generate capital velocity. And we are kind of sitting between the yield import and the yield processing. So we take some of the yield that's already on Solana, repackage that, give it to users in a way that's easier to access. Sometimes we partner with neobanks that repackage USD Star so that people who are not familiar with DeFi at all can access USD Star yield and therefore Solana yield and therefore all the other crypto yield right now. But we don't need to stop at crypto. Really, any high-quality cash flow generating business can all be packaged into this new on-chain token structure. Think like GPU, renewable energy, solar panels, frontier tech, you want to go to space. There's a ton of businesses that banks and traditional financial institutions have no idea how to underwrite, that crypto, using new models and using new wrappers, we can better underwrite and we can better sell and give users this yield. So why did I talk about the asset management part? Because on-chain asset management creates new yield primitives that feed back into DeFi. So most of you guys who are LPing on Meteora right now probably use USDC or Sol. I know there's been a push to use LST Sol, such as Jito Sol, and Sanctum's also working on something cool there. A lot of guys are trying on the Sol side because Sol has native yield. With dollars, I think it's something similar, where USD Star is pretty early right now, but you can see, I hope that people will go use USD Star and other similar assets to outpair against other assets so that both assets are more productive. As in, if you have the base being a productive asset, let's say USD Star against Jito Sol, even if nobody's swapping, the USD Star and the Jito Sol are both earning yield, so your baseline yield is going to be much higher. And that's why I hope for every asset on Solana can become. And that's why I think you guys, people should try to fight the liquidity moat of USDC and Sol and get into more productive assets, and I can talk about why/how we can do that in a much longer conversation. But the velocity compounds if we do that together. By the end of the year, we would have distributed $500,000 of yield imported to the Solana ecosystem, and this is just the beginning. We've been live for a short few months. So please find us at Breakpoint's only flower cart and put your stables to work. Thank you.